Welcome everybody. Welcome to today's market profile bulletin for Nifty and potential auction paths. Myself, Dean, you can get in touch with me on Twitter or visit my website get-tradingis.in. Software used for today's report are bill market profile and bill order flow. For more details on the software, please visit belltpo.com. Let me go through the disclaimer. Information shared here is not a trading recommendation and we are not in business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. Let's go to charts. This is the chart for Nifty. This is today's development, and in yesterday's report I mentioned that if we open below this spike low and immediately get some continuation lower, there is a chance that we will test lower references. But what have happened today was there was a gap down, then we went higher and tried to enter yesterday's range, the spike, but this reference here, which I had mentioned in my yesterday's video log, this did not let prices enter yesterday's range and send them back promptly. What happens afterwards is you get a nice tight balance forming just below the spike low. During this balance, I was having a neutral bias. Now, there were some conflicting signals. One was that this expected behavior was not happening. So it suggested that bears were not that strong, or they have, at least momentarily lost the control of the option, as well as the value was forming clearly below the spike low, or you can say this small distribution. Now, this was a bearish development, and not getting the expected follow through was in favor of buyers. So these two conflicting developments, kept me on the sidelines, suggesting that the auction has not yet made its mind where it wants to go. The smart money was after the fact, we can say that they were accumulating, but during this particular consolidation, it was not at all clear which way the auction might head. What tipped the scales was this failed auction. Now, this is the kind of signal which I was waiting for this whole time. I had some discussions on Slack where people were asking me whether this was a redistribution or accumulation, and I said I am not sure. I need a sign, and as soon as I got this sign, I entered a long, as well as I entered this chart on the Slack, suggesting that this potential failed auction might be the signal which we were waiting for, and this suggests that smart money has lost all its interest to the downside for time being, and we might move higher and test higher references. So immediately the reference comes to my mind is this one, and then of course there is this anomaly, which is evident on more on profile chart than the volume graphic, and then there are higher levels, the point of controls, volume point of control higher. So when I said that there were multiple distributions in yesterday's profile, in yesterday's video log, what I wanted to tell you was that this is kind of a forced action, and whenever there is a forced action, auction has a habit of going back and testing the levels where this forcing action occurred. So there is a chance that prices, as it is, they have risen nice today, they might continue its up move, test these levels, and then at some or other level we will come to know whether this auction is tiring or not. Currently this is a nice one time trending move higher, closing at the extreme. Today's day is a nice neutral extreme. Generally these kind of days develop at important reversal points, so whatever inventory adjustment market had to do, maybe that is done. They have checked the buyer strength in this area, which I had mentioned day before yesterday, and they are now moving up. So it might be possible that we repair all these anomalies going higher, or if the bears have really decided to take the prices down, the smart money has distributed in this upper distribution range, then there is a possibility that we might test any of these references and fail. So what exactly happens, we will come to know once market develops further, and we see how the auction is progressing, whether there is strength in the auction progression or not. Uh, this whole development though looks like a D, so there is that possibility also. We might fail here. If we fail at this immediate reference, there is every chance that we will come down tomorrow itself and test this level or this level. But if at all we start finding acceptance in this zone, absorb the sellers from here, then there is a chance that we might go higher and test higher references, and then decide whether to even accept here or continue, or immediately reject from here. So immediate rejection from here, bearish scenario, will test this point of control and this HVN, possibly this failed auction. If we accept here, chances are higher that we test even next set of higher references. Acceptance there will take prices even higher. But there is a chance that we might reject from here after repairing this particular anomaly. So of course, I mean, it's not going to happen in one day, but we will track auction as it develops and then try to find out what it is trying to do. So these are a few of the potential market development paths that may happen. One other thing also may happen, that we open inside this spike, accept here, test this particular reference, build a small queue in the process, buyers from this zone again assert themselves here, and then we start moving up. So that is also a possibility. So these are a few possibilities going ahead in tomorrow. Let's check out the Bank Nifty chart. Bank Nifty was more orderly. There was no big spike. What was evident was this nice V shape, and we have immediate target for this V shape as this repair of the point from where this long liquidation started. Now again, this is a spike too, and we have a few anomalies here, as well as these high volume nodes, one here, one here, this one we have repaired. So again, the same drill. This acceptance lower suggested that bears had the upper hand, but this B shape and this subsequent rally and closing inside the spike from yesterday, tells us that maybe the bears will take a breather, let the auction go higher and repair these anomalies, and then take a call whether to resume its move higher, repair the anomalies, maybe even here, and then take a call whether to continue or fail. So these are the possibilities, unless and until, I mean, if there is a very bearish news overnight or something like that and we open gap down, we have to be ready for these wide possibilities. There is every chance that if this thing happens, then anybody buying in this range, even smart money who bought in this range, then we will have to throw their positions and get out of the market. So this is also applicable to Nifty, but more possibility here, because in Nifty we have actually closed above the initial balance high, and that in itself suggests that the bulls are in control. Not so much here, but here also we are closing above the value at high, so that again puts the ball in the court of the bulls. But I mean, I think it is better to let the auction develop itself and then take a call. There was a nice opportunity on Nifty to go long, which I took, and I had also mentioned it in the Slack, so I hope you guys have taken benefit of that. What prompted me was this order flow chart for Nifty, and as soon as that tight balance started developing and I got this particular action, I highlighted this, of course, on Slack. You can see that there were a lot of sellers in this bar going right into the low of the bar. But look at the close of the bar. The close is well off the lows. All these sellers are now trapped. We get a nice test on the very next bar, and then the rest is, I mean, you all know what happened. We just, oh, sorry. No, we just moved higher, and it was a nice long trade, uh, trading with the smart money, closing right at the highs. One might be tempted to carry the longs. I don't know. Some of you might have, but I prefer to, not to be on the wrong side of the main auction. We have this particular development. Let me show on the Nifty chart. We have this kind of a failed auction, nice distribution, and then follow through. So it might happen that we test some higher reference and fail, but why to take a chance when you are getting such a nice move intraday and your entry was right at the low of that day, and if you get to exit at the high, it's always better to get out of the market. So my exit was, of course, I mean, first was this, the high for the day, and second I covered some close because I did not want to carry the position forward. So I think that is all for today. Let's see how the auction unfolds on Monday. So have a good weekend. One reminder, tomorrow 10 a.m. I have that webinar on trading crude oil using market profiles. So be sure to attend. You can visit my website, getthattradingish.in. To register, I have posted that link on Slack. You can visit belltpo.com to register. So there are all the options available. Please register and visit tomorrow's webinar. So thank you for listening, and we'll meet on Monday. Have a good weekend.